Hi everyone, Frank Restorick again from
Easy-Insured.com.
Just want to do a quick video around our new blog post, Canadian Guide to Life Insurance. Life insurance can be a confusing topic. There's term life, there's whole life, there's mortgage protection, child's insurance, lots of different terms out there in jargon that we use in the industry that can be confusing for Canadians. There's two fundamental types of insurance. Term insurance, meaning that it is for a set term, for a 10-year, 20-year, 25-year, 30-year, 40-year term. And then there's what's called permanent insurance. Generally, there's three types of permanent insurance. Participating insurance, or called PAR, where it pays a dividend every year. There's what's called whole life non-par, which has cash values to it and the premium is guaranteed, but it doesn't pay a dividend every year. And there's term to 100, basically a permanent plan. The price will never increase and your coverage will carry on to age 100. So depending on your situation, or you may want to use a combination of term or permanent depending on your situation. Term insurance is great for younger people, 30s, 40s, 50s that have a mortgage and have some dependent children. Seniors, once your mortgage is done, once you have your kids are no longer dependent on you, then you can have a look at converting some of your term insurance, and it's always critical to purchase renewable and convertible term insurance, meaning that when it renews, when the term is up after 10 years or 20 years, you can renew it if you want to without providing any medical information. That's critical. Also convertible, meaning that you can convert it contractually with the insurance company. It's in your contract that you can convert it to a permanent plan at a later date. Permanent insurance is generally used for, like I said, seniors, or once your mortgages are done and you want to have something to cover your last expenses or to leave a legacy for your children. You want to guarantee an inheritance. Maybe you want to leave money to your church or your alma mater, whatever it is, whatever is personal to you. Great way to do that. The money comes tax-free to your beneficiary usually within a week to 10 days. A month ago, I had delivered a death benefit check to a lady that I wrote her and her husband. Her husband died in the hospital from COVID-19. Had written to them 25 years ago a permanent plan with a term rider on it. As they got older, as the mortgage was gone, we dropped off the term and the permanent was there. Unfortunately, he passed away of COVID-19, and the benefit check I delivered to the widow. And seeing the look in her eyes, the relief when she looked at that check, is something that I will always remember. I've delivered a number of benefit checks over the last 28 years, but you always remember the policies that you've written yourself. For younger families where budgets can be tighter, when you have 2 or 3 kids and a mortgage, term insurance is a great option, and matching the term appropriately. There was a study put out by one of the online insurance providers. They were saying 36% of Canadians are overpaying for their insurance. I think there's 2 reasons for that. One is they're buying mortgage insurance from their bank or from their mortgage broker. Expensive plans, and they're not underwritten medically up front, so there can be lots of problems later when you try to make a claim, your family tries to make a claim. Also with term insurance, people are locking in term rates for much longer than they need. They're buying 30-year term when their mortgage and their kids they may be needed for 10 years. So you need to, in my opinion, mix and match your terms, life coverages, based on your situation, where the mortgage and with your children's, and how long they're going to be a dependent. So a couple of thoughts there. So if you have any questions, please reach out, send me a meeting note request, or an email, phone call. Happy to chat with you. Thank you.